May 10th, 2015. Economic predictions are notorious for being wrong. The next 10 years are predicted to be everything from glorious to catastrophic. Economists have all their bases covered. In the midst of economic confusion and chaos, we only have one tool available for explaining the world around us: theory. Different schools of thought offer mutually exclusive theories about how the world works. The school of economic thought that I identify with, the Austrian school, has been criticized especially hard for predicting economic crises that haven't happened. Supposedly, the lack of price inflation and severe recession since 2008 are proof that Austrian theories are inaccurate. I am not sympathetic to these criticisms for many reasons. First, the relationship between theory and reality is misunderstood. I will elaborate on this more in the future, but suffice to say that economic theory is not and cannot be disproven with data. I realize that sounds blasphemous, but it's true. A theoretical proposition like the minimum wage causes unemployment is not contradicted by country X having a high minimum wage and low employment. The reason is simple. It's impossible to control for all variables in the real world. Countless different factors determine the unemployment rate in any given country, and so we're forced to say something counterfactual, like the unemployment rate in country X is higher than it would have been without a minimum wage. But this is a topic for another time. The second reason I'm not abandoning Austrian economic theories is because I actually understand them. In fact, I'm willing to stake my reputation on this. Hold me to it. If the economic predictions I'm about to make do not come true, then it is reflective of my own lack of understanding. I will admit that I'm wrong and be forced to revise my worldview. But if my predictions turn out to be right, I hope the same revisions will be made by those who do not currently agree with me, like 90% of the talking heads on financial news networks and a significant portion of professional economists. So, I will present my own predictions for the US economy, and instead of fully explaining why they will happen, I'll focus on why they haven't happened yet. The overarching prediction is simple. The US economy is headed towards a massive economic crash. This crash will coincide with the global financial system being restructured away from the US dollar, which will lose a significant percentage of its value due to inflation. These events will occur for three main reasons. Number one, the Federal Reserve has artificially kept interest rates at or around zero for over 6 years. Number two, the US government has an astronomical public debt of over $17+ trillion. And number three, obtuse banking and financial regulations have created artificially huge banks and moral hazards in financial markets. During the early 2000s, we saw something similar. The Federal Reserve held interest rates at historic lows for a historically long time. Federal regulations and interventions like the FDIC, Fannie Mae and Freddie Mac, etc., created enormous distortions in financial markets, which manifested themselves in the housing boom. And as we saw, the entire financial system was deeply tied to the housing market. Once the bubble started to burst, the whole financial system imploded. This wasn't necessarily a bad thing, it was the market's attempt at a correction. Had that bust been allowed to fully happen, had the correction been free to serve its purpose, then we likely wouldn't be facing the next even larger financial collapse that is coming. Instead, the federal government intervened, and the Federal Reserve ballooned its balance sheet and cut interest rates even further to the unprecedented level of 0%. In other words, the very problems which brought us the '08 collapse were compounded manyfold, and to the extent the intervention was worse, the subsequent market correction will be worse. So, when will the big collapse happen? Well, when you understand economics, the answer becomes crystal clear. We have no idea. Trying to predict specifically when some economic event will happen is simply guesswork. There's no way to know beforehand, as that would require knowing all of the plans, values, and choices of hundreds of millions of people at once. Anybody could have predicted in the 1920s that the Soviet Union was bound to collapse at some point for economic reasons. And they would have been right, but they would have had to wait 70 years to see it happen. I think this is why so many people fail to grasp sound economic theory. It's because the cycles take decades to play out. The same criticisms of the Soviet Union's centrally planned economy can be directed at the United States economy. It only takes an understanding of basic economics, just the fundamentals, to see the inevitable correction that we're headed towards. So, why hasn't the correction already happened, and why hasn't inflation been more severe? I have a few hunches. Most importantly, World War II. The The US economy / the US dollar has had an enormous capacity for manipulation because of how World War II ended. In 1944, the Bretton Woods system was established, which made the US dollar the world reserve currency, which was an unprecedented status in monetary history. Because the dollar was redeemable in gold, this meant that countries across the globe could use it as a stable currency. And many countries even explicitly pegged the value of their own domestic currency to the dollar. Various important commodities were, and still are, internationally priced in USD. So for more than half a century, the dollar has been in high demand across the globe. This high demand has allowed our central bank to create trillions of new dollars without immediately feeling the effects. Essentially, the dollar's status as the world reserve currency allows the United States to export inflation, especially since we went off the gold standard in the 1970s. Between the government debt that's currently held by foreign countries, the USD that's traded globally by private businessmen, and huge bank reserves that are currently sitting in vaults, trillions upon trillions of dollars are kept from circulating throughout the domestic United States economy. But those dollars haven't disappeared. Just because they aren't circulating now doesn't mean they won't circulate in the future. If and when the holders of US dollars start losing their confidence in the dollar's value, if they suspect that too many new bills have been created, then they will want to get rid of them. And this starts the inflationary spiral. As more people exchange their dollars for tangible goods, prices start rising, which causes even more people to lose confidence, and this makes prices skyrocket and makes the general standard of living plunge. This is the textbook story of inflation, and it has happened countless times throughout history. The groundwork for this event has already been laid. The dollars have already been created, but we don't know when it will happen nor how severe it will be. It could be hyperinflation, or it could be stagflation like the 1970s. It might be preceded by deflation. It might start with a stock market crash. It's impossible to know with certainty. Though if I had to guess, it seems quite plausible that a deflationary crunch will precede an inflationary spiral. Only one event is needed to start the dominoes falling: a change in people's confidence. At some point, people will realize that the USD has terrible fundamentals, and then the inflation becomes inevitable. But until that point, the charade will continue. Of course, when we understand the essential role of people's confidence in economic phenomena, it becomes clear that we can't predict with any kind of specificity when events will occur. We can't see inside the minds of millions of people or predict their decisions even 5 minutes from now, much less 5 years. In the same way that the US dollar has been perceived as a safe currency, the US government has been perceived as a safe government. United States bonds, which is essentially loaning the federal government money, has been synonymous with a safe investment for the last 3 generations. This is also true worldwide, and as a result, our national debt is currently over $17 trillion. Now, I don't know what the upper limit of national debt is, but I do know that at some point, people's confidence in the United States' ability to pay back its debt will be eroded. Maybe it's 20 trillion, maybe 50 trillion, maybe 100 trillion, I don't know. But I do foresee a big problem at current debt levels: paying the interest on our loans. Right now, with interest rates at historic lows, it doesn't cost the government too much to make payments on its debt. But when interest rates start rising 5% or 10%, that won't be the case. A good example of this is Greece. They found their upper limit of public debt, and it's causing a massive crisis of confidence. For decades, Greece has been borrowing money to pay for public programs. It hasn't caused any crisis. But anyone who understands economics can rightly predict, at some point, creditors will stop financing a country which can't get their national debt under control. It might take 30 years, but it's going to happen. And now, Greece is facing a mountain of problems. They might even be forced from the European Union's monetary system. This brings me to my final point. One major reason the dollar crisis hasn't started is because other currencies look even worse, the euro in particular. Again, for basic economic reasons, the euro is doomed to fail eventually. Centrally planned currencies will collapse for the same reasons centrally planned economies will collapse. It's just basic economics. But given the historic reserve currency status of the USD, and given the strength of the United States military, the dollar looks pretty strong in comparison to the rest of the field. In fact, depending on European events, we could even see a significant strengthening in the dollar before it collapses. If Greece, for example, were forced to leave the euro, What would happen to Portugal and Spain, who also share astronomical levels of government debt? What about Ireland and Italy? We might see dominoes starting to fall in Europe before they do in the United States, and if that's the case, the USD will undoubtedly strengthen as it becomes in more demand. This could kick the can that much further down the road. For this reason, anybody who really understands economics is forced to make watered-down and open-ended predictions. We just can't know what exactly will happen in the future. Perhaps some incredible new technology will be created, which raises everybody's standard of living tenfold. Well, if that's true, we won't feel the pain from a dollar crisis. Perhaps all the trillions of dollars sitting in bank vaults will be burned, and if that's the case, we won't have to worry about them circulating through the economy. It's unlikely, but I'm not going to claim it's impossible. I can't foresee the clever ways the government and central bank might delay the inevitable. They're incredibly good at it. Though these predictions might sound doom and gloom, they're really not. They're quite simple conclusions from uncontroversial premises. Governments cannot borrow limitless amounts of money. Central banks cannot print limitless amounts of money. And to the extent that the money supply overexpands, prices will rise. If these premises are true, and if the United States does not radically change course, then we are indeed headed for a severe recession. I realize that putting absolutely no time frame on these predictions is boring, so for the sake of good fun and pure speculation, I'll disregard my own advice and take a guess. I would be very surprised if the US dollar lasted another 15 years without a serious crisis, and I wouldn't be surprised at all if it happened within 3. Of course, this kind of speculation should not be mistaken for sound theory. My position is not unique. Many prominent economists also foresee a crisis coming. These same economists also predicted the previous '08 financial collapse. I only hope that people realize this is not a coincidence. The reason a small group of people have been able to make these predictions is because of their theoretical understanding of the world. It's easy to spot the problems after the fact. Hindsight is 20/20. But to see through all the economic chaos and predict beforehand that a crisis is coming, that reflects the remarkable accuracy of a theory, and everybody should be willing to adjust their worldviews accordingly. If you like these ideas, make sure to subscribe. And if you want to help create a more rational worldview, then please head over to my Patreon page and you can support content like this for $1. To read this article or to learn about my books, check out steve-patterson.com.